Somewhere right now, someone is sitting at a desk. Not a trading floor, not a Wall Street office, just a desk, a screen, and a strategy they've been quietly perfecting. They don't have $100,000 in the bank. They don't have connections. They don't have a finance degree. But they have something that is worth far more than all of that. Discipline. Prop firm trading has quietly become one of the biggest opportunities in the financial world, and most people still haven't heard of it. The idea is simple. Prove your skill, and someone will give you the capital to trade. No inheritance required, no institutional connections, no luck. In this video, we're going to break down exactly who can step into this opportunity and what separates the traders who succeed from those who don't. 5 types of traders. Let's go through each one. The beginner trader. The first type is the beginner. And before you skip ahead, stay with this because this part matters. You do not need years of experience to start preparing for a prop firm challenge. The foundation is simpler than you think. A laptop, an internet connection, the willingness to learn how markets move, how to manage risk, and how to keep your emotions from driving your decisions. That's it. That's the starting line. The traders who make it as beginners aren't the ones who learned the fastest. They're the ones who stayed consistent the longest, who treated every demo session as if real money was on the line. Because here's what prop firms care about. Not how long you've been trading, but whether you trade with structure. If you're new, start now. Learn the craft. And when you're ready, the challenge will be waiting. The skilled trader with small capital. There's a specific kind of frustration that only traders know. You've put in the hours. You have a strategy that works. You've watched your win rate climb. You've learned from your losses. And yet, every month, the numbers barely move. Because trading $200 or $500 can only take you so far, no matter how skilled you are. Your skill isn't the problem. The size of your account is. Prop firms exist precisely for this trader. Not to teach you how to trade, but to take what you already know and give it the fuel it needs. Pass the challenge. Prove your consistency. And suddenly, you're not trading your $500 anymore. You're trading $50,000, $100,000, with an 85% cut of every dollar you make. The skill was always there. Now the capital matches it. The disciplined trader. Ask any funded trader what the hardest part of the challenge was, and almost none of them will say, finding a winning trade. They'll say, staying disciplined when everything in them wanted to push harder. Prop firms are not just evaluating your strategy, they are evaluating you. Can you respect the maximum daily loss, even after a bad morning? Can you walk away from the screen when there's no clear setup, even when you want to make something happen? Can you let a small loss stay small, instead of doubling down to recover it? These are the questions a funded account asks you every single day. Because what a prop firm is really doing when they fund you is trusting you. With their capital, under their rules, in real market conditions. The disciplined trader doesn't just pass the challenge, they thrive inside it. Because the rules aren't restrictions, they're the same guardrails that professional traders use at every level of the industry. Discipline is not a gift. It is a decision made over and over again. Who cannot trade prop firms? Now, honesty. Not every trader is ready for this. And knowing that is not a setback. It's actually an advantage, because awareness is the first step to change. If your default response to a losing trade is to immediately open another one to win it back, a prop firm challenge will expose that quickly. If risk management feels like an obstacle rather than a tool, the daily loss limits will feel suffocating rather than protective. If your position sizes change based on how confident or frustrated you're feeling, that inconsistency will compound against you under challenge conditions. The traders who fail prop firm challenges don't fail because the markets were unfair. They fail because old habits followed them into a new environment. Prop firms reward consistency, full stop. Not big wins, not bold calls. Consistency. If you recognize yourself in any of that, don't walk away. Get to work on those habits first. That's exactly what demo accounts are for.